And now Muhammed Wagley from Sasfin Wealth joins us for a closer look at what's playing itself out on the market scene. Thank you so much for your time, Muhammed. Everything always seems better in the morning, and things do look better when it comes to Japan, but not necessarily here back at home and in the European market. It's going to be quite interesting to see how those US markets open up. But really, how do you reconcile, I guess, maybe the rebound that we have seen in Asia and I guess the lesser losses that we are seeing on the JSE with the Black Monday that we had yesterday?
Well, first of all, always a pleasure to be on your show. So thank you very much for having me. But it's quite an interesting one. You know, I think very much the market is a case of sort of perceptions. And when we see sort of panic prevail, I think we do tend to see a bit of an overreaction. And I think more or less that is what we're seeing here. I've got to say that, you know, he's a very successful man and, you know, very intelligent. But I really do feel sorry for Mr. Powell in this moment in time. You know, it really does seem a case of, you know, damned if you do, damned if you don't. I think had they cut rates last week, for example, and just for context here, you know, a lot of this slump is that the market is now fearing that we are, you know, very late with cutting those rates. And when that September rate cut comes in China, it's probably going to have to be, you know, to a greater extent. And on the back of that, we're seeing risk-off sentiment prevail. But I just feel, you know, had they come in and cut rates last week, then the market would have felt that the Fed was panicking, and we would have seen a similar type of slump. So very much a case of, you know, damned if you do, damned if you don't. Personally speaking, I'm not necessarily panicking here. As long as you've got a skew towards quality, I think you'll continue to do well. But, you know, it's not a linear thing. The market doesn't just sort of continue to rise in isolation. And we do tend to see movements like this. In fact, last year, around the same time, we actually did see quite a substantial drop. And yeah, these things happen, you know, at the end of the day.
We're talking about panic because now a lot of market participants are actually pricing in a 50 basis point cut by the Fed in September compared to the 25 basis point cut. Could that not induce more panic?
Well, I think a lot of that depends on sort of the data that comes out from now to September. We've got about a month and a bit before that does happen. But yeah, as you rightly mentioned, you know, for the most of the year, it was, you know, if we'd get the rate cuts in September, that was the question. And now it's really to what extent those rate cuts are going to come in at. I don't think it's inconceivable that it could cause a bit of panic, but I think that's really the adjustment phase that we're going through sort of right now. So I think maybe in the short term, depending on data, we'll probably continue to see a bit of volatility, but I think by the time September comes around, it'll probably be a little bit less panic, depending, you know, on how things go then. But I do think it'll be priced in by then. That's my view.
All right. Well, let's go into some of the company news that came out of the JSE. Nedbank coming in with their interim results today. Definitely no panic there, as we have seen that share price up almost 3%. Of course, we did see double-digit growth in their headline earnings per share, and actually quite encouraging there with an impairment charge that is lower. What did you make of that performance, and really just how investors have reacted to these numbers?
Very interesting. I think in a word, very good. I think in a word, good. I quite enjoyed these numbers, I've got to say. You mentioned it earlier. HEPS was up up double-digit. Headline earnings were up 8%. Revenues, sort of from non-interest sort of related activities, were also up quite substantially. What I really liked, though, was that we saw that credit loss ratio ticking down. It's currently at basically about 1% now, and it improved by about 17 basis points, you know, from the previous period. I think the market also quite liked that. Another good thing to note was that they declared an interim dividend, which was about R1 higher than the previous year. So always good to see that. I think, you know, all in all, I'd say these were, you know, quite a strong set of results against what has been a tough economic backdrop. But I thought also what was quite interesting just in terms of guidance, they did note that they'd been benefiting sort of from improving conditions subsequent to the election in relation to the government of national unity. And it seemed that the outlook in that respect, you know, was quite positive. So also quite interesting to see that.
All right. Well, another interesting one is Afriat. It came out with a business update today, and actually quite interesting. They've said that the interim period has been one of 2 quarters, seeming that there's quite a mixed bag of things that happen there. What are you making of Afrimat, but also just the inclusion of that Lafarge cement business?
Mhm. Well, so I suppose let's start there. So that part of the business, has been under pressure. It's not yet at this moment, contributing much, but the outlook there is still quite positive. It's been pretty depressed, but going forward, they're hoping to make a little bit more from that, and they're hoping it'll be a bit more of a sort of a fundamental player in their mix. But just coming back to the 2 quarters, they really painted two different pictures here. The first quarter being one that was defined by a depressed commodity market, as well as issues, in their sort of with their steel partners at ArcelorMittal, where where there were issues with their furnaces at Van der Bijl Park, which put a lot of pressure, on the volumes and things like that. But then, look ahead to, or look rather back to the second quarter, things are looking a little bit rosier. We're seeing some improvements in the volumes there. There's been an increase in sort of tender activity in road, rail, and small infrastructure projects, all which they sort of stand to benefit from. But what I think was interesting, and also, Nedbank also did notice this in terms of, guidance. They did mention that they were quite optimistic in relation to the GNU and the effect that that has had on the company and its stakeholders. They're hoping that the continued collaboration will lead to, further growth in the country, and then as a byproduct of that, as in the company as well.
Yeah, it's quite interesting because even some people that have chosen Afrimat as their stock pick have basically bet on the benefits that Afrimat will get from further infrastructure investment by the GNU. So, yeah, quite fascinating there. Muhammad, before we get to your stock pick, let's head on over to reflect on some of the counters that have found favor with some of your industry peers.
Go with Microsoft. I think it gives us a bit of participation in the artificial intelligence. That is some way to go before we can see real value out of it. But it also gives us the stability and defensiveness that we need in the current environment. I mean, it's trading at 34 times, which is not necessarily a dripping roast, but I do think that it is a defensive stock that can weather the storm very well throughout the current volatility.
So I'm going for Renet. This is a medium to long-term hold type of business for me. But at the moment, you can enter at roughly about 35% discount to NAV. We spoke about BATS, but British American Bank is at about 21% of the NAV now, low 20s. Most of the value lies in a business called the PIC Pension Corp, which is a unique asset that African businesses can't get into. So a pension corp has got about 20% of the UK bulk annuity transactions, so pretty much meaning your defined benefit plans that companies are trying to get rid of and still selling into businesses like pension corp. We think there's an enormous pipeline going forward, and they've got big market share there, and at some stage in the future there's going to be corporate action.
To be honest, I think we're getting to a level in markets, which would include South African Global, where you're going to have lots of opportunity. When I look at the Apples and the Microsofts and Nvidias, all of those have come down dramatically. The results are superb, and I think you're going to have very soon a very good time, choice to get back into the market, especially Nvidia now down at 100.
Yeah.
So just be aware. I don't want to say go out and do it now, but we come to that period where we're looking to get back into the market.
Yeah, well, quite interesting ones, and two really focusing on tech. Let's actually start off with that whole blanket pick by David, the tech stocks. Of course, that were beaten badly yesterday, even though we do have, I did see earlier that US futures were higher. I'm not exactly sure if that is going to filter through to those tech stocks today. Some people seeing it as a buying opportunity. Yeah, would you be seeing, that dip as a buying opportunity as David thinks?
Yeah, so just I suppose speaking to his overarching point that this is very much a buying opportunity, especially for those that are convinced of the technology, convinced of the quality of these companies. I'd be very much in agreement. Sort of all of those big tech quality players are companies that you'd be looking to increase your exposure if you've not got any. I'd very much be looking to a lot of those companies that he mentioned. In fact, all of them trying to get some exposure there, you know, and I'm quite glad that he did sort of a bit of a blanket pick, because that does reinforce the point that, you know, sort of seeing through the noise, this is a great buying opportunity.
And specifically Microsoft?
Love Microsoft. If I didn't see that, you know, the gentleman had picked it, I may have just picked the same one myself. You know, incredible company, diversified player in all the right spaces, super strong balance sheet. You know, this is one to hold, and one to hold for the long term as well. You know, if you've not got exposure, again, get some.
All right. Well, what about Raynet, their the investment holding company?
Yes, interesting pick. It's not one, I've got to confess, not one that I follow too closely. I think the analyst there mentioned it, or perhaps it was Julieta who said something along the lines that most think it's just sort of the BATS exposure.
Yes.
But I think, you know, I did fall in that camp, I've got to say. But what I can tell you, without speaking to the sort of the merits of it from a long-term investment, I've got to agree with your analyst. You know, it's looking very attractive from a trading perspective. 45% discount to NAV. You know, so from that perspective, definitely worth having a look at. But I've also got to note, you know, most of SA Inc. trading at relative discount. So hoping for good news and good momentum, hopefully towards the end of the year.
All right. Well, let's get to your stock pick for today. Since you're not choosing Microsoft, what are you picking?
So I'm going to go with probably the other diversified player in that space, and that's got to be Alphabet. You know, it's a brilliant company. When we speak with reference to AI, they've pretty much got exposure throughout the whole process. And, you know, from that perspective, I really quite like them. I think much has been made sort of the regulatory issues per se, and maybe some ad weakness, but I think these are sort of short-term noise, and the company is definitely, you know, going to come through that. If you've not got any Alphabet, you've got to have some.
Right. Well, thank you so much for your time and for your insights on what is currently moving investors' money in today's trading session. Muhammad, that was your midday market update with Sasfin Wealth's Muhammed Wagley.